All right, welcome back to your favorite podcast on the planet, Realty Talk.
Yeah.
We have an exciting episode today. We are on site in the Mesa office for Innovate. And I missed our intro. So to my right, at the entryway of our beautiful La Mesa office.
There's a closing table in there for sure.
That is right. The queen of the closing table, right next to the closing table, Suzanne, founder and CEO of Innovate Realty. I am Paul Hansen, hostess with the Moses.
Paul Fix It All Hansen. I think are you going to start incorporating that in your?
I will.
Okay.
I got.
We're warming up. We're getting there.
I got to get that baked in there. So, but we got a jam-packed episode today. A little bit of a shift. We're outside of the entryway at one of our locations, and we're going to dive into a lot of that. But before we do, we probably need to unpack current events.
Yeah.
Market update.
Yeah.
A lot of craziness going on today.
Yeah. There's. I mean, I think just in general, with the extended shutdown, I think there was a lot of pressure on Trump and really, that party in general to come out with positive solutions for consumers and people in general. So a couple things have been thrown out that impact our world. So number one is the 50-year mortgage. So we could talk a little bit about that. And I think we both have thoughts on that. The other thing that I saw today was Pulte mentioned basically oh my gosh, I don't remember the term, where you can keep your existing mortgage and the rate, floating it to another property. So I think those are two things that we could unpack a bit and how that would actually, affect consumers.
Yeah, it's kind of interesting how that product specifically, they're basically trying to float a mortgage rate to another asset to encourage the market to trade and open up. I think, a couple of broad line notes around other things that are happening as we dive into that. Fed did make that cut that we, spoke about on the previous episode. There's some discussion about what's going to happen in December. Obviously, Trump and the Republicans would love additional rate cuts, stimulate the market. Not really sure if that's the smartest thing long-term for the economy, but, it certainly help the resale side of our business, which is a good segue into this big announcement this week of people saying, okay, 50-year mortgage.
Yeah. It's tough because there's at first glance, I want to say, hey, creative solutions to get people into mortgages. Like, at the end of the day, if you really want to buy a house, there are ways to do it. And that is another tool to get that done. But as you unpack that, I think, and peel the layers back, it's like, the consumer's going to be paying so much more money. And it's, can you imagine 50 years before you actually own your house? And I think I was looking at the numbers and it's like, a $400,000 house on a 30-year mortgage, you're paying closer to like $800,000 really with after interest.
But if you keep that loan intact for the full 30-year term.
Yes. But on a 50-year, you're looking at like 1.8, and so then you also have the problem of potentially not having a ton of equity in the home. So that could definitely hinder things long term, because if you are trying to sell your home and you're on a 50-year mortgage and homes are not appreciating the way that they were, and you're paying $50 of your payment goes to actual principal. It's
or less.
Or less. You
early in the amortization schedule.
You have no equity. So that could actually do the opposite of what the intentions are there. So, I think the average consumer doesn't stay in their home for the full 30-year term. It's, what is it? I think it's like 7 years. It
was 7 years before COVID, and with where rates went down into the twos, they believe that they could go as high as 13-year. Like the average American consumer could stay in a mortgage as long as 13 years because, they're not really incentivized to refinance out. If they're 2.5%, they'll probably never refinance that unless they just have to move. But I want to double click on something you mentioned, which is, appreciation or building equity. And I think that's one of the arguments that they're making, which is, and this is a statistic that we look back at, typically American home values, if you look backwards 50 years, increase in equity 1% more than inflation. And so there's appreciation, if inflation's at 3%, then home values typically raise over a long haul. You can't look at a 1 or 2 or 3 year band, but you got to look over, 50 years. You'll see typical appreciation 1% higher than that inflation number.
Right.
And so, I'm still conflicted. I don't know that I've spent enough time to really fully understand the dynamic for a consumer. I oftentimes on this podcast say date the rate, right?
Yeah.
So if you got to go and buy a house, find a way to get into home ownership, and then find a way to get out of the mortgage and get into something a little bit better long term. So that could benefit that buyer that's on the fringe.
Yeah.
But oftentimes, we probably haven't discussed it on this podcast, but I had a previous business where we would sell services to a consumer, and we would use consumer, stated unsecured line of credit to finance the business or the transaction. And we look back, we worked with a lot of third-party financing institutions like GE Capital. And
right.
One of the things they were pushing heavily was this, no interest, no payment program for 18 months on these purchases.
Yeah.
When we look backwards at our performance, I think only 30% of the borrower that would take that no interest, no payment loan actually paid it off within that 18-month period. Right. And then the interest rate went to 21%.
Right.
And so I think what typically happens with American consumers, broadly, is that we overspend. We spend more money than we have. We take on debt, and we have the intention of taking that debt out or refinancing it for a better rate. But then we just kind of get used to the typical lifestyle. Right. And then they stay in it. So my gut response is that I'm kind of poo-poo on a 50-year mortgage, because I think buyers will get into something, unless rates drop drastically, they're not going to refi out. If they do refi out, they'll probably refi out into a lower interest rate 50-year mortgage. Right. And they'll be stuck, in that trend. And so,
and I mean, I think there are just better solutions. For example, the buy down, we talk about this, and that's what that's what we're really, a permanent buy down seems like a much better solution. And again, it's just knowledge. I think working with the right lender is super important, and just knowing that, yes, there's going to be the new flashy thing. But at the end of the day, you have to see what really works for you and your scenario. And I think 50 years probably few and far between. The only thing I will say, though, is if for some reason, there's an argument to be made, you get in on a lower 50-year mortgage, but I think this goes back to your point. So you have a lower payment, and maybe instead of just putting that money in your pocket, you're taking the money that you're saving and potentially investing it in something else for growth. That is definitely a thing, but I think we know that most people, that's not the way we spend, and that's not the way we live. So.
No, if somebody could afford a $400,000 home at a 30-year mortgage, the 50-year mortgage is going to allow them to buy a $500,000 home. Yeah. They're going to buy the $500,000 home versus buying the $400,000 house with the 50-year program and then paying it down faster. Yeah. So it's going to, I don't know what it'll do to the market. Yeah. This is why it's always a conflicting conversation, because it's certainly going to help us on the resale side. Yeah. I think it's going to be, bring buyers back in if it goes. FHA is potentially underwriting this. So I think the only other thing I would say about the macroeconomics of what that could do is that, if you believe that inventory is still undersupplied, which we believe, we don't believe that's the case.
We know,
There's an undersupply of inventory nationally. That's existed since 2008, 2009. We're not catching up to the inventory that we need. Mm-hmm. And so those values of assets that are here today should appreciate. Yeah. And we've heard a lot of chatter around, hey, there's a mortgage bubble and there's a housing value bubble that's coming. We believe the opposite, where, we saw a lot of volatility from 2020 to today, or really 2010 through today. Prices going crazy, upward 10, 20, 30% in some markets. I think there's an argument that real estate values will be really flat and vanilla for the next 10 or 20 years because of that inventory problem. Right. So this could actually solve, some of the challenge for a typical American consumer to get into homeownership. Right. So I think the fact, the data point is still that we're right around 40% of Americans own a home.
Right.
So, it's a big swath of consumers that don't own. They don't feel they can own because they can't afford it. Maybe this helps.
Yeah, I mean, that's why I say I'm torn, because it's like a part of me feels that if there is anything that is going to help someone get into a home that actually wants to do that, I think, hey, we welcome that,
Yeah.
But I think that there are other ways that exist currently for, that people can take advantage of. And potentially, if we're looking at this from a long-term effect for that consumer, is it the best choice for them? So
you imagine how cheap a 50-year mortgage at 2.5% would be, though?
Oh my gosh.
Free money.
I mean, but at 2.5, they're not going to do it. That's not.
If that ever happened again, I would
Yeah, totally. Yeah, makes sense.
That's a good segment into where we're at and what's going on.
Yeah.
And podcast today, if you're listening and you hear some background noise, we're in beautiful La Mesa, San Diego County. Mm-hmm. I'd love to have you kind of explain what this all is.
Yeah, so at Innovate Realty, we have multiple locations. We're continuing to grow and expand. So this is one of our 6.
Yeah.
Gosh, I honestly lose count all the time because we just added a South Bay location.
Yep.
And we're opening a Westlake location very, very soon. So we're really excited, but we have 2 in San Diego. And then we also have a Corona location and 2 in Orange County in Irvine. So I guess, the question is, and I think probably what people think, like, what does that mean for a client? Like, does that matter that we have these locations? And what is the advantage, And I think there's a few things. I think the biggest thing that we preach at Innovate is we don't just take care of our clients, but we also take care of our agents. Agents are also our clients.
Yep.
And so I think the more opportunity for agents to come together, to learn, to train, to work together, and, create something really great for their clients, I think that's really important.
Yeah.
Also market knowledge, I think being in La Mesa here, like the agents that work out of this office, they know La Mesa like the back of their hand. There's never a question of, what the value of a home is. These agents here absolutely know. So I think, that's definitely a positive for consumers. But ultimately just giving agents a place to go and really have a home and creating a great culture. I think real estate oftentimes can be, I've talked about it before, can be a really lonely profession.
Yep.
And so we've really made it a point to bring agents into kind of a different environment where they feel supported and like they can do their best work for our clients. So it all kind of feeds together.
Yeah. So what we're doing is creating an opportunity for a collaborative environment so that an agent, whether they're on a team or independent in that specific market, can master their craft, which the byproduct then is that a consumer, the client that's going to be the buyer or seller, has a great experience.
Yeah.
I'd love to double click on that piece though, because this office looks a little different. It's not branded, the way that we typically brand at Innovate. So, and I think there are teams inside of some of these offices. Mm-hmm. But that doesn't necessarily mean that they have to be on a team. Is that worth double clicking on for all the agents that listen?
Yeah, I mean, I think for our agents, we said from the beginning when we formed Innovate, we don't have egos. We don't care really. I mean, we care about brand recognition,
sure,
of course, but it's not about us. It's about our agents and what's best for them. So a great example is this office here in La Mesa. They have a brand, they've been here for quite some time, and we would never want to take away from that. So if there's already something that's working for an agent, it's common sense that we're going to fit right alongside with that. I mean, I say it's common sense, but a lot of brokerages force their brand in the mix.
Sure.
But yeah, I see no problem. I mean, it's not about that to us,
Sure.
It's about the agent thriving in the market they're in and doing the most business they possibly can. And we never want to get in the way of that. Like, we want to encourage that as best we can.
Yeah. So I think, a lot of times in brokerage, or at least what I'm learning, is that the ego of leadership gets in the way of doing good business. And, I think, data is what I always come back to. But the fact of the matter is, in 2025, this specific office, along with the agents that operate out of the office that are not necessarily on this team, are going to account for 1% or just shy of 1% of the total market share of transactions in San Diego County.
Yeah.
Not just La Mesa, but San Diego County as a whole. That is by far the most productive location out of all brokerages in Southern California for a specific market. The share that they have is incredible.
Right.
And I think that goes back to, obviously leadership at the top, being flexible with not having an ego, like our picture is not on the face of the building, right?
Yeah.
But more importantly, it's creating that collaborative environment for an agent to learn and be able to transact efficiently for the client and seller or buyer, which then, creates repeat business.
Right.
And so it's really cool to watch the way that that plan is being rolled out, and it's obviously producing.
Yeah. Yeah, I mean, that's what it's all about. I think the biggest difference that you'll see with us from other brokerages is it's not about anything except for our agents being successful, doing what they love, and creating a great experience for their client.
Yeah, I mean, I think so. The last, I guess, piece of this is we didn't intend this to be a sales pitch for
Yeah, I know. I'm like, wait a minute, is this Innovate Day?
This is not a commercial. This is just a conversation. But I think, if you're agents, because we get a lot of feedback on the podcast. If you're an agent at Compass or a Sotheby's or a wherever in Southern California, why would you stay there versus joining one of the Innovate teams or joining Innovate and then finding a home in one of those Innovate offices? Why wouldn't you do that?
I mean, that's a great question. I think, honestly, it's lack of knowledge, and that is,
we're here.
They don't, not only maybe they don't know that we're here, but I think they don't know that there is something better. When we created Innovate, we sat down and said, okay, what are all the top brokerages doing good? What are they doing bad? And why do we want to be different? So I think we have some really exciting things when it comes to an in-house media team, for one. I mean, the reason we're able to do this here. And last week we had on our director of marketing. And, these are things that brokerages are not investing money into, where we're taking the opposite approach. For example, I was telling you on the way here, I obviously don't do a ton of real estate transactions with, clients. I do transactions for you now, but mostly running the business. But, sometimes someone special comes along the way, and I'll definitely help them. And, our media team was able to create just such a memorable closing experience for first-time home buyers, that just had the smoothest transaction ever because they worked with experts in the business and showed up to the property to get their keys. We had our media team there. We created basically like a wedding video for them for their closing day. And, it made them cry. And that's something that they're going to remember forever. And that's just one example of, how our media team translates to our clients, not just our agents. It's not, we were also talking earlier about it's not just agents walking through properties. I specifically said in that video for my clients, I don't want to be in that. This is about them. This is for them. So I think, being able to give that to your clients, and even people that put thought into that, and going back to the ego thing, you often find that with real estate agents where, they do want to be in the center, and that's okay. We have options with our media team for that as well. But, putting thought into the clients and all of the tools and resources we have, not just for agents, but for our clients as well.
Well, I want to double click on that too, because with the intention of creating something valuable for the client, a memorable experience and a smooth transaction, the byproduct of that, having an internal media team that produces it, the byproduct for you is that now, not necessarily that you want it, but there are 3 other people that want specifically to work with you to represent them on a purchase or selling their property.
Right.
And so I think for agents that are listening, my recommendation is to find a brokerage that is investing in the resources to put you as the professional and the focal point of the transaction, not necessarily, again, from an ego standpoint, like face on everything. If you want that, we can do it.
Yeah.
But creating value in a way where it's not just, hey, we sent this video and that was the end of it.
Yeah.
There was a lot of thought around what happened, and we never asked for anything, but they went out and blasted it to the universe in a digital environment. And the byproduct of that is that there's more business coming. And so, I think it all kind of blends in. It's like we're investing in locations to make you a market expert in that specific location. We're investing in technology and marketing and an in-house media shop that will do whatever you want.
Yeah.
And so you just send the request and we're going to be on site and we're going to produce what you need.
I did hear our media director is going to at some point join our podcast here to share some tips with our listeners soon.
That's
too.
Exciting.
So he's going to pop on the other side of the camera.
All right.
So
it's very exciting.
Yeah. Okay. Well, that's all I got. I feel like that wasn't intended to be an Innovate pitch.
Sure.
But I think we're here. We should talk about it.
Well, we should talk through we kind of skipped over some of the market data points that we typically talk through. It's November.
Yeah, the market.
It's November.
Yeah.
Historically, the last quarter is slower than the rest of the year. Buy Buy House has 6 or 7 houses on the market today, but it was 9 houses a week ago. So, we're seeing some activity, which is good. So we had a Costa Mesa property that went into escrow very quickly. That was a pretty unique transaction. I mean, we took it live and had 2 or 3 offers, one all cash and one that's significantly north of ask within 72 hours. We had a property in Palos Verdes that went into escrow that actually had been sitting for about 3 weeks to get the first offer, right?
I think like 11 days to be exact.
Oh, you know.
I'm on that one, so I'm like,
So those 2 specific pockets are moving quickly. And then we have some inventory that is taking a little longer. So from your perspective as, the CEO of Innovate, what is determining the success of a listing in today's market?
Yeah.
We're seeing both sides on inventory.
We are. I mean, I think in any market, it's always coming down to being priced well and producing a good product, So I think there are pockets, as we've talked about, that there is, although we are going to contradict ourselves from talking about not having a lot of inventory earlier, there are pockets that do have a ton of inventory right now. So those homes, I mean, unless they are priced to move, they're taking a little bit longer because buyers do have more options. I think coming out of a government shutdown, talking about, the fact is interest rates did drop down. And that information is getting out there. So we're seeing more and more consumers kind of, come back into the market. But ultimately, if you're priced right, and it doesn't even have to be premium product. If you're priced for what your product is, it's going to move. And I think we saw that. We made the right calls on where the property should be priced, and we made those transactions happen right away. And I think sellers are finally, I would say, after some time, kind of coming to that same realization that we're not in the same market that we were a few years ago. It's not a seller's market anymore. It's not a buyer's market, but it's not how it was.
Yeah, so. I mean, so the only, for me, I'm a buyer and a seller of real estate, right? And historically, they've said if average days on market is 90 days or less, it's a seller's market. If it's over 90 days or more, then it's a buyer's market. That might be changing, but I think some of it is just expectations for a buyer because we've come out of 4 or 5 years of incredibly liquid, very volatile market where what I mean by that is, historically, if you look back 50 years, it would be reasonable to sit on market for 60 days to find the right buyer.
Right.
In a real estate transaction, a big transaction, not $400,000 or $500,000, $600,000 transaction. It's, a big life event for whoever's going to be the purchaser. And so the last 5 years have created this expectation that you list it right, it's great product, it's going to get multiple offers in 5 days and go over ask and no contingencies and all this stuff, right? So we're coming out of that market into a market where inventory, we say, is high, but if you look backwards, it's not an insane amount. I mean, even markets, we have an LA property where there might be, call it 6 months of inventory on the market.
Yeah.
If you double click and you literally look at all of it, there's 6 months of homes to sell based on the number of purchases that have happened over the last year. But for our specific product that's fully renovated, it's like 2 or 3 months.
Right.
And so you're saying you got to price it right based on what your product is. And, you know, maybe that takes 90 days where in the past it took, you know, 5.
Exactly.
Yeah.
Yeah. So, so yeah, I mean, we're definitely, I mean, ironically, we are seeing more movement now than we did in the summer. Everyone thinks summer's the best time, but actually 2 years in a row, it's actually picked up post-summer for us. So.
I mean, interest rates today, 30-year fixed is 6.2, which is right around the lowest it's been in the last 12 months.
Yeah.
But buyer confidence is the lowest it's been in like 30 years.
Yeah.
Or, you know, American consumer confidence. And so, you know, it's a mixture of all those things that we're, you know, seeing affect what's happening and in the resale side of our business, I would say.
Right. Okay.
Is that a wrap?
I think that's a wrap. I think we nailed it.
All right, we have to do one final shameless plug for agents that are listening in San Diego County. I have to do it. Otherwise, it's going to come across fairly biased. But if you are at a brokerage in really Southern California as a whole, and you don't feel the support from your brokerage, you know, marketing, tech, you know, lead generation, locations, a collaborative environment, I don't know why you're not picking up the phone and calling us. I mean, you know, we're heavily investing into the growth of the brokerage and providing real value to the agent base. So that's my shameless plug today.
We'll take it.
Call us. Use code Paul Fix It All to get your highest listing split. I'm just kidding. You don't need to use it. Just call us.
Yeah.
That is a wrap for this week. Realty Talk. We'll see you next week. Please hit the subscribe button, however you're consuming this, whether it's Spotify or YouTube. And don't forget to send us your stories. We're skipping the story this week because all of the ones that were submitted were not inspiring. We need more inspiring stories.
Okay.
All right, we'll see you next week.
See ya.